Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend, Don Durett from goldstockdata.com, here with us live. Don, thank you so much for joining us today.
Hey, Elijah, thanks for having me back.
Well, it's great to have you today. I wanted to turn this interview into a live stream because things seem to be moving very fast. Over the last couple of weeks, we've seen silver, break back above the $39 level, and today we've seen a bit of a pullback in the metals, but silver is holding that $39 level. Your perspective on where we are in silver?
Well, it's complicated. It's not a real easy answer to kind of explain why we're at 39 and then where we're going. A lot of technically, the silver chart, because we've been in a kind of a correction for 10 years and it's lagged quite a bit, as far as all-time high goes. You could say that, the all-time high in silver, if you go back to 1980, and you give it like a 40 GSR. I went to 50, but I don't think we could use that because of the Hunt brothers. But if we just use like a 40 GSR back in 1980, it would take us to $88. So I think that's a legitimate all-time high for silver, 88. So we're not even close, right? We're not even 50% back. And I think that's kind of a legitimate target, 88. So we're real early innings here for silver. As a matter of fact, I mean, if you look at the Hecla chart, it hasn't even broken out yet. So we're still struggling to break out. We're at $39 silver spot today. And Hecla, which is one of your standard, leaders in the silver space, there's not that many silver producers to begin with. There's only 15 with a market cap over $100 million. I mean, it's a tiny, tiny group of stocks, tiny segment. And Hecla is one of the leaders because all of its mines are in North America, and it hasn't even broken out yet. I created what I call the Mormons list, which was the seven prettiest, eight prettiest silver names. So you can marry all of them. That's why I call them the Mormons. Marry all eight. And they're up. I created that list in November of 23. And that list is up. This is together as a group, 170%. And they're still all five baggers. And half of them are 10 baggers. It's pretty crazy that the silver miners are so cheap still. But what's going to happen soon, I think this year sometime, is silver is going to start running. So basically, it's been struggling. It's been going from 35 to 37, 38, 39, but slowly. We haven't had a big candle, which we need. We need that big candle. That's what we got when we broke out last year in February, March, April of 24 with gold. We had this big candle and gold was off to the races. And it went up over $1,000 in 12 months. Unbelievable. Went up 27% last year, and now it's up 27% again this year. So it's like boom, boom. And, it's been off to the races, 50% move in a little over a year. And so we haven't seen that yet in silver. We're waiting for it to happen. And we'll talk a little bit about, why it hasn't happened and, what's going to make it happen. But my point is when silver does get that big candle and does finally start to go towards its nominal high, which is 49. But again, 49 is meaningless. We're really heading to 88. And so once we make that run to 49, these miners are all going to go up 200%. They're like going to double and double again, which is going to, and then at that point, anybody that's not in is going to kind of miss the big returns. And that's what's going to happen. Everybody's going to be buying Hecla when it's like $18, $20. And today it's at six. They'll wait. 15 to $20 is when everyone will buy it because it'll just start ripping. It'll be up 100%, 150%, and that's when everybody jumps in, chases the Momo. But we're getting close to that outcome.
When it comes to like silver inventories, we have a viewer asking the question if you have any insight with respect to like where the current contracts are long versus short and also delivery requests. I know we've been seeing some crazy action on the major exchanges recently, but if you want to give us an update on that.
Well, I followed that for years, and there's never any correlation. And to this day, I don't think that you can use the open interest and the COMEX data to predict the future or forecast the future. People have been trying to do it for years and years and years, and never really have been able to nail it. It's just the data just isn't um, it's not as useful as I would like. So I basically stopped, really caring about open interest or how much silver is available on the COMEX. And people right now we're seeing the same thing. We see this over and over again, where people kind of read into the numbers and say, silver's going up here because there's not enough silver at the LBMA or at COMEX. There's not enough. Is that really the reason silver's at 39? I don't think so. I mean, it's possible, but I think the reason it's at 39 is because it's just so cheap. It's playing catch up. Like I said, the all-time high is 88. It is at 39. At some point, it had to play catch up. Um, Gold, for instance, had an all-time high in 19, or let's just use 2011, of 1900, right? 1900, and we're at 3350. 1900 versus 3350, whereas in 2011, silver 49. So in other words, silver's not even close to its all-time high, and gold's way past it. So silver's not only at a nominal all-time, but it's at a legitimate all-time high. 30, a little over 3,400, but it was just there. I just touched it, not, I think, this week or last week. So you can see silver's just playing catch up here. Silver's cheap. Like I said, if you look at the silver miners, they haven't even started running yet. I mean, you look at the silver chart of Hecla, it hasn't even broken out. So I don't really see the exchanges as the reason things are going higher here. I just think it's catch up. I think silver's cheap. A lot of people are saying it's the cheapest commodity there is. And the reason why silver is so cheap is that it hasn't pivoted yet into being a monetary metal, but it will. The only time silver is a monetary metal is when you have what I call a fear trade, but it's when people do not want to own stocks. They don't want to own the S&P 500. And then at that point, they start, if you don't want to own that, then you start thinking in terms of what do I want to own? And silver suddenly, gold becomes very interesting as a hedge. And then silver is the proxy to gold. Gold's the leader, gold's the big dog. And so when gold takes off, if you will, silver follows because silver becomes that monetary metal, and silver is taking off because of uncertainty. We can get into why silver is so strong here, and I think the uncertainty is something that's it's really difficult for people to really understand. But to me, it's pretty clear why gold is at 3,300 heading to 5,000. To me, it's obvious, but if you watch mainstream TV, watch all the cable channels, you will basically get the impression that the economy is strong. And if the economy
Hello, is this
the economy is the kryptonite for gold. If the economy is strong, gold is not doing well. I mean, best example is 1980 to 2000. The U.S. economy was at its height from 1982 to 2000. Gold did nothing. It's the kryptonite. So if gold's doing well, that's telling you something. It's telling you that the economy has underlying weakness and somebody's nervous.
No, there's also a lot of uncertainty out there. We're seeing the trade wars seem to maybe come to a conclusion here as the US is making deals with Japan and possibly the EU and China. Well, I guess we'll see what's next. But then also you have the Ukraine war intensifying. How do you see geopolitics and these trade wars impacting the markets right now?
Well, we haven't had a significant recession since 2009. we had a little bit of a hiccup in 2020, but it was it was really a COVID related issue, kind of a pandemic related issue. And the Fed and the Treasury injected enough money to basically kind of make it a nothing burger. So, I mean, that registered, I mean, even if we had a recession, it was barely noticeable from the data, the figures. It wasn't a standard recession where corporations start laying off, 5%, 10% of their workforce. It wasn't a standard recession, if you will. And you had a V-shaped recovery on the stock market. So you didn't have the stock market did not react as a recession. So so we're basically 15 years plus, which is highly unusual. In fact, this is the longest period where we haven't had a recession. It's 15 plus years. It's very, very highly unusual. Well, everybody was talking about a soft landing. Can we get a soft landing? When they started raising rates, at what point were the rates going to take their pound of flesh? And it hasn't yet. And so now Wall Street, we're up 6,300, PE of 22, 23, and everybody seems to be in this mood that we're going to get a soft landing, that we don't have to worry about a recession anymore. Well, simultaneous to that, I mean, if you look at all the data points, everything's still currently, as we speak here today, the economy is slowing. GDP's hanging in there, but a lot of these sectors are having trouble. There isn't really any sectors that are really leaders here. I mean, you could point to tech, but I think that is more of a FOMO trade than anything else. Everybody's just chasing it. And as the simultaneous to the economy slowing, Trump now is implementing these tariffs on August 1st. Now, these tariff deals are basically taxes on the US consumer. And the US consumer is the life force of the US economy because 70% of GDP is consumer spending. So let's look at some of these deals that were made. We just had a deal with Japan this week. The deal is they're paying 15%, well, the US consumer, but exporters, it's a 15% tariff to get into the US for Japan. That means all the autos that come from Japan just got thrown a 15% tariff. That's significant. Then flip side, we only pay 2% the other direction, 15.2 for Japan. They did a deal with Indonesia this week as well. Indonesia is 19 for them, 0 for us. Vietnam is 20% for Vietnam, 0 for us. Great Britain, 10% for them, 2% for us. So these are all these one-way deals. Now they're talking about he's trying to do a deal with Europe, and they're saying 15%. So Great Britain only paid 10. They're talking about 15%. Trump's he's being tough on them, and he's basically saying 15 is as low as I'm going. That you either take it or leave it. He kind of did that with Japan. Japan was at 25, and Trump was like, okay, 25 or 15. Which one do you want? And they're like, what do we do? Would we basically tell him to pound sand and do the 25? And they basically were practical and they said, no, we'll do the 15 because it's probably only going to be for 4 years. And then we'll get the next administration, we'll get them maybe to lower it down. So these deals are all one way, but they're high. I mean, so when Trump came into office, the average tariff coming into the US was 2.5%. Starting August 1st, the average is going to be above 15. And that's a big hit. And so all of these products are coming to the US above 15. So that's going to create upward pressure on inflation. And the economy is slowing. So I don't know when it's going to happen, but I think that we're going to get a significant correction in the stock market sometime in the next 90 days, sometime before October, say 15th, before mid-October. I'm expecting a significant correction. And then we'll see how the market reacts to that. And we'll see how these tariffs start to have an impact. But I think that retail sales right now, I think, are anemic for the year. Real growth and retail is flat to down, which is recessionary numbers. Auto industry with these high tariffs are lots of and in tandem with high interest rates. So the auto industry, well, they're having trouble selling their cars. Let's put it that way. Plus, Trump is putting higher tariffs on steel, and so that's going to impact the U.S. car builders as well because they import a lot of the stuff they need. Because historically, importing steel was cheaper than U.S. steel. So that's going to impact the U.S. They use a lot of steel to make these cars. So that's going to impact the U.S. auto industry, but across the board. Then if you look at housing, housing is basically it's reaching its zenith as far as housing prices. They're basically starting to come down. Let's put it that way. And so we're starting to see weakness in the housing industry. So, and then if we look at banking, banking has, this ugly balance sheet because they have all of these bonds on their balance sheet that are underwater. And they're going to stay underwater because interest rates aren't going to go back down quickly anytime soon. So the economy on the whole is just hanging on. And I just think I'm just waiting for that shoe to drop because again, we're 15 years into this and I just don't see the soft landing. I think that these high interest rates and tariffs that combine, when you combine both of those, I think that this economy is really on thin ice here and the ice is cracking as far as I'm concerned.
Do you see this impacting silver at all being an industrial metal, or do you see that on a technical level? I mean, silver has broken above a lot of these resistance points. So, how do you see silver reacting in the coming months here?
So what I see happening is in the near term, gold and silver will do what gold has been doing for the last 12 plus months, which is follow the stock market. So the stock market keeps hitting these new all-time highs, hit an all-time high today. As if it does that, then gold's not going anywhere. Gold has been in a range from 3250 to 3450. And it's just staying in that range and just hanging around and just following the stock market. You pound it down, it's been very volatile, plus $25 up, plus 25 down. And some days plus 50 up, plus 50 down. So gold's been very volatile. But whenever they push it down, it just turns around and comes right back up because gold is the real deal here. Gold it understands what I was saying about the US economy because when we do have a recession, the fragility in our financial system is significant and gold is sniffing all that out because the US treasuries are the fundamental collateral of the global economy. And if US treasuries are no longer risk-free, that makes gold very valuable. And that's what's kind of happening here is are US treasuries risk-free? I submit they are not. And gold is sniffing that out and gold's not going anywhere. So I turned bullish in April of 24 on gold. And when I mean bullish, I lost all fear of a deep correction in gold in the near term. It's like we don't have to worry about it. We don't have to worry about $2,900 gold anymore, I don't believe. Now, I think the floor is about 3,100. If you got a big crash in the stock market, you could go down to 31. I don't think we're going to retest 3, but I think 31 is kind of in play here. But even if you go down to 31, it's only going to stay there for about 2 to 6 weeks. That's it. And it's going to start trending back up because gold's the real deal here. Gold's leading. Now, to prove to you that gold's leading, this year, the S&P is only up 6 or 7%. Gold's up 27% and miners are up 50, 60%. So gold is the leader and gold's taken over leadership. So last year, gold was up 27, the S&P was up 27. They're basically both up the same. This year, it's a near story. Gold keeps going up and the market hasn't kept up. Gold's the leader. Gold's the real deal. And gold's not going anywhere. Gold's heading to $5,000. Everybody's starting to figure that out. Now, silver, in the near term, I expect a significant correction, I said, in the next 6 weeks. And when that correction happens, I expect $35 silver to get retested. and likely 34 to get retested. We could go all the way down to 32. So we're going to get, but I don't think this correction will last more than 2 to 6 weeks, and then we'll just head higher. The key here is once this bull market ends on Wall Street, once it ends, then you're going to get what we've been waiting for. And basically, we can equate that back to the 1970s and the 2000s. That's when the miners and silver and gold did really well, outperformed the stock market by multiples. In the 1970s, gold went from $35 to $8.50. Silver went from like $2 to $50. Huge multiple expansion in gold and silver, and the stock market did terrible in the 70s. That was the ultimate move in gold, but history will rhyme. Then in the 2000s, gold went from $250 to $1935. Massive multiples, and the stock market was flat. If you look at the S&P 500, where when it peaked in 2000 and then where it was in 2011, basically flat. But the gold was outperforming by multiples. So what we're getting ready to experience is the stock market going flat and gold and silver going up multiples again. Now, I don't know if gold will, get to $10,000. My target is 5,000. I'm very conservative, but I think 8,000 is definitely in play here. And my target for silver is 125 to 150, but I think 200 is in play here. So we're getting ready to see basically massive moves in gold and silver. Now, the reason why silver is going to do so well, it's two-pronged. One is the fact that gold's going to go up and silver's going to follow, but it's all about silver becoming a monetary metal. And so when silver becomes a monetary metal, it only does that when people want to buy gold but can't afford gold. And so what do? So what happens is you get into this fear trade where people are watching the news, stock market is going down, all we hear is bad news. We hear these layoffs from all these major companies, and people get nervous and get afraid. At that point, they're going, I got to buy some gold. And then they look at their banking account and they go, I can't afford it. But I can buy silver. And they head to their local coin shop. Guess what? They can't, there's not going to be any silver at your local coin shop. It'll be unobtainium. And then they'll go online and they'll buy it online, of course. And then it won't take long. You will not be able to find any 5-ounce or 10-ounce bars online because those are the premier collectibles or stacking. You don't really want to stack 100-ounce silver bars. They're hard to sell. 5-ounce and 10-ounce and rounds and coins, but coins have higher premiums. So it's the 5-ounce and 10-ounce bars that everybody's going to want their hands on. And you won't be able. Once we get to $50 silver, it'll be unobtainium. And then once you go to unobtainium, it's just a matter of time before silver just goes rockets up, $60, $70, $80, and then you get your 88, that my target.
Well, Don Durett, it'll be very interesting to continue to track this with you. If people are interested in learning more, they can go to goldstockdata.com. Can you tell us a bit about your work there?
Yeah, so I created my database in 2012. So first I wrote my book. So if you're interested in gold and silver mining stocks, my book's is basically a textbook that it really explains how to understand, how to analyze them, and how to understand the risk of the gold and silver mining stocks. Then after I wrote my book, I created the website. Now I wrote the book because there wasn't one. And then I created my website because there wasn't one. So my website is basically data. It's not really a stock picking website. It's more of a data website. So if you want to find a gold silver miner, my database has 850. It has all the gold and silver miners, but it has a lot of data associated with each one. So I mean, whatever you're looking for. So if you're looking for a mid-tier producer with low cost, boom, hit, put it in there. It'll give you a list, and you can do your own due diligence. So that's the main one. And you guys can follow me on Twitter at Don Durett. But thanks for having me on, Elijah.
Thank you so much. As always, you have a good day and God bless.
Thanks.